please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, keep an eye on individual telecom stocks. Bharti Infratel as well as Bharti Airtel should come up for you. Both of them have moved to the high point of the day. The Bharti twins, they've been a bit under pressure for a while earlier, but right now they're at the high point of the day. Apart from that, we have HCC. That one's lost about 70% from the start of this year and currently trading at the low point of the day. HCC has extended its cuts. We're seeing some weakness in NALCO, Voltas, as well as Motherson Sumi as well. Motherson Sumi has moved to the low point of the day. And United Breweries, we spoke about it, how it's moving on a Friday. Seems like maybe that bottle is over. The first bottle is over because that stock has moved off the high point of the day. So how to trade individual stocks and as well and trade the Nifty? We have with us Prakash Gaba joining in for a quick technical check. Prakash, what's your view? The Nifty 10,725 right now?
Well, looks like we can see an up move to maybe around 10,740 or 50 zones. But to my mind, what we have seen downside is actually a weakness. For the larger ranges around 10,800, I don't think, unless it gets taken out even this week or next week, we must assume that any move that we may see is more of a down move. And downside is open, like I would say, to maybe around 10,685. If it breaks 10,700 today, perhaps we can see 10,685. Not much downside, but yes, that's a place we can see some support.
Okay, Prakash, what about your stocks?
I have two stocks, both on the short side. Canara Bank looks weak to me, and we can see a slide to around 245 zones, stop about 256. And TCS also is looking weak. A slide to around 1800 is possible, stop about 1826.
All right, Prakash, thanks very much for joining in with your trading ideas. Well, the stock on our radar now is Shriram Transport. Remember, just a short while back, we brought you this segment called Hunting for Value. And the stock that we've been focusing on today is Shriram Transport. It's lost about 10% from its 52-week high. But as demand now in the underlying sector is picking up, the on-ground capex is gearing up to meet the kind of expanding demand that we're hoping for in the future and that CV makers are talking about. So let's discuss all of that and more with Umesh Revankar, the MD of the company, who now joins in. Mr. Revankar, good morning, sir. Thanks very much for joining in. So let's first talk about the demand on the ground. What is the sort of feedback that you have? What are the feelers you're getting? And therefore, what are you building in for FY19?
The demand continues to be quite good, even though the heavy vehicle demand is likely to slow down in the next couple of months because of monsoon. Because infrastructure activity and mining activity will come to a halt in the month of July and August. So I expect the heavy vehicle sales to slow down. But the demand for the LCVs and the tractors, other vehicles continues to be good. And the used vehicle demand continues to be good because the rural demand is quite good. So the rural demand is helping us to keep up the lending activity at a quite high scale.
All right. Are you well capitalized, Mr. Revankar?
Yeah, as of now, we are adequately capitalized because we have to maintain 15% CRAR, 10 plus 5, which we are above that. Overall CRAR at around 16.5, and Tier 1 is around 14.3. So we are reasonably, yes, but if you are planning for a big jump in the what call lending for next couple of years, we may have to look at raising some equity, which we will be taking call by the year end.
So one of the concern on street is regarding the IND-AS implication on the NBFCs with respect to the provisions. So could you highlight for us, despite the fact that Shriram Transport has always maintained a 70% plus PCR, that is provision coverage ratio, how do you see IND-AS impacting your provisions or credit costs for FY19?
It should not impact us because we have been maintaining the accounts as per the IFRS requirement in the last couple of years because of our partners' requirement. So we have been maintaining their accounts. So we are well prepared. In fact, the higher provisioning what we maintained is because of this preparedness. So we are totally prepared on that. There should not be big difference between the current accounting policy and the new accounting policy as far as the end result is concerned. And we may not have a big increase in credit cost or increase in JNPL because of this.
The rural economy is in the focus, and you have been speaking about it in your previous interviews also. So you have opened about 200 branches in FY18 in the rural centers, and they contributed, I mean, they grew at a rate of 35 to 40%. Could you highlight for our viewers what this is doing? I mean, the rural economy is doing right now for you, and how do you see growth going ahead?
See, our rural expansion plan, we started around 5-6 years back. And we started putting rural centers there. What we did is we tried to put a one-man or two-man office, and with low expenses, we started building businesses. And there were drought years when we started, and the yield, the number of businesses, what we generated was little lower. But last 2 years with a good monsoon, this rural demand has picked up. And this year being, this year again, they have forecasted good monsoon. I expect the rural demand to, because ultimately the agri movement is what vehicle carries. And the agri-produce have been good in the last 2 years, and this year also is likely to be good. So there is more activity in the rural area, and plus with the consumption going up, because even though there was a pickup in the output, the basic consumption of the rural did not go up. First, in the previous years, in 2016, is because of demonetization. But subsequent to that, people got adjusted, and the cash is back, and people are able to transact and trade. So there is a reasonable good pick in consumption this year. And if the cement picks up, if the construction activity in the rural area, housing activity in the rural area, and cement picks up, it will be a big boost for us.
Okay. So how might cost of funds pan out?
Funds, yes. See, we are now trying to focus a little more on the retail resources also. And that's what we are planning to come out with NCD issue. And we are a deposit-taking company, so we're also focusing on our retail. So the retail plus the other avenues have opened up, that raising money from the ECB source. So I think we should be able to raise enough money for the growth. I don't see any challenges as far as raising resources is concerned.
Yeah, but at what cost, sir? I mean, will there be a pressure to your NIMs? And what are your FY19 targets in terms of disbursements as well as loan book growth?
There should not be challenge as far as the overall cost is concerned, because if you look at what we raised money 3 years back, because we don't have any short-term funds. We all have 3+ years. And if you go back to 3 years back and at what cost we raised, almost the same cost we would be raising this year. So there should not be any additional pressure on us as far as the NIMs are concerned. We should be able to maintain the NIMs. And we'll be able to pass it on to the customer also, because our customers we are a niche segment of used vehicle. So in used vehicle, we would be able to, small ticket, we should be able to pass it on to the customers.
And FY19 disbursement you said was how much, target?
We are planning to grow at around 18 to 20% on AUM basis overall.
All right. Thanks a lot, sir, for joining us and giving us all those details. We wish you good luck for this fiscal. With that, let's slip into a short break. Nitin Spinners, the stock on our radar on the back of rising cotton prices. We'll get chatting with Mr. Nolka.
Welcome back. You're watching Chartbusters. Well, the company on our radar now is Nitin Spinners. So the expectation is that there could be rising cotton prices. To discuss the impact and also the outlook for FY19, we have Dinesh Nolka, the MD of the company, who joins in. Mr. Nolka, good morning, sir. First up, could you give us the trend in the cotton prices? Has there been an increase already? How much? And what's the kind of inventory that you're sitting on?
There has been an increase of about 10 to 12% in last 1 month in the cotton prices. The last 6 months prices starting for the season was about 41,000 rupees a candy, average prices. Now it has gone up to 47,000 rupees a candy. And as far as inventories are concerned, most of the good spinning mills having reasonable finances are covered with more than 3 months of inventory.
All right, so that includes you as well? 3-4 months of inventory, you've bought at around 41,000 per candy?
Yeah, more than 3 months, I would say.
Okay, more than 3 months. So in that case, can you tell us how the differential between cotton and yarn has played out, and what kind of impact can we see on your margins on account of this? Because cotton prices have increased by about 10-12%. You're sitting on 4 months worth of inventory at prices which are 10% lower. So can we see that kind of impact come by on your margins as well?
Actually, if you see in our industry, it takes slightly, maybe 1 or 1.5 months time to pass on the prices. And also we have the order books. So accordingly, there has definitely the margins will improve, but it is going to be gradual.
Any number that you can put to it?
Means basically, I would say the other way around, that this time the cotton prices have gone up because of, I would say, because of demand pull. So there has been good demand. If you see the export figures also, they have been very good. They have been very good in the May. The cotton exports, if you see, it is about 24% rise in the cotton yarn exports in the month of May itself.
So what is your mix of exports and domestic? And is this a mix likely to go up now because of, to cater to this kind of demand?
Normally it is about 65% exports and 35% domestic. So we normally maintain this kind of levels all around the year. So if on an average basis, yes, this may go up slightly, but not, it will be marginal effect.
All right, Mr. Nolka, you know, the street likes what you're saying. The stock has now moved into the green in terms of the stock price, given the prospects that you're sharing for the industry as well as your company. If you could tell us a little more, you know, last announcement that you made to the exchanges, you've issued about 6.5 lakh shares to the promoter group. What is this for? You already have a plant on stream, right? So any reason why you've issued some stake to the promoters?
Yeah, basically we are planning an expansion of our, so that is, for that purpose we have increased our, we have raised the money. We have issued some preferential issues to the promoters, and also we have done a QIP about 5 months back. All this money would be put into a new capex, which will be coming on stream in next year.
So did your one of your plants come on stream on February 2017 itself? So what is your total capacity right now, and how much are you earmarking for capex? What will your total capacity be post this?
Actually, our capacity at the moment is about 50,000 tons of cotton yarn at the moment, including our last expansion. Going forward, we are putting up a new vertically integrated plant where we will be making yarn as well as weaving, and then the fabric as well. So this will be an integrated complex. We will be spending about 675 crore rupees in this expansion. So this will be with a capacity of about 25,000 tons on the yarn side, about 3 million meters on the fabric side, similar kind of capacity in the processing also. So this will be coming on stream in next 1 year. So this, all the fundraise from the promoters as well as from the QIP will be diverted to that kind of capacity.
All right, and finally, how will your revenue mix change? What is it right now in terms of cotton, in terms of yarn, in terms of fabric and knitted wear? How does this change once this factory comes on stream?
Once this factory comes on stream, I think our fabric portion will increase to, means we are doing about 16-17% on the fabric side at the moment and 83% on the yarn side. Now this should increase, our fabric portion would increase to about 25%. So this will be a 75-25 mix for us.
So that means your margins will be in excess of 16% in the next fiscal, because you have better tailwinds coming in from cotton prices and improved product mix?
We expect to have better margins, but I cannot put the number to this. Rather, since we will go vertically integrated, the margins on the fabric side, since this will be a complete composite mill where we'll be making from fiber till the fabric, the margins normally in this kind of business is more than 20%. So we should be expecting good margins in the fabric, and then rest of the yarn business, of course, will be contributing still majority of the portion, I would say.
All right, Mr. Nolka, we'll leave it at that. Thanks very much for joining in. So Nitin, spinners definitely expecting margins to improve from here on. A quick break. Up next, lots more on the market, and we'll also try and bring some exclusive news for you, so you'll want to stay tuned. There's news flow coming through. In fact, we understand from sources that LIC is in discussion with the government to pick up some stake in IDBI Bank. Kritika joins in now with the details. Kritika. Kritika, can you hear me?
Hi, Sumera. Yes, we have been able to confirm from our sources, Sumera, that LIC is in discussion with the government for stake in IDBI Bank. Now, we have been able to confirm that the discussions haven't reached the board yet. As per the regular process that LIC has to undertake before any investment decision, there is an investment and a strategy committee that clears any investment. So these discussions have reached the investment and strategy committee for now. The quantum has not been decided yet. So it's a very initial exploratory talk at this point in time. They are open to a significant minority stake. There has been no conversation for a controlling or a majority stake. So what a significant minority stake means is anything below 25%, which gives them that option of a majority. We don't know the quantum yet, but based on the kind of conversation and negotiations that happen in the investment and strategy committee, they will decide that specific quantum. Again, we don't know what that exact amount could be. They are open to this, yes. We don't know if the talks will go through or not, but we understand that in the next few months, if the investment and strategy committee clears this, only then will it reach the board, and only then will we see an actual deal being discussed. So the reports that have been out on a possibility of a controlling stake reaching the board and the board clearing this are not true. We do understand, yes, that this is something that has been discussed by the government and LIC for a possible stake in IDBI, but we don't know what that exact quantum will be. That will be decided in the days to come.
All right, Kritika, thanks a lot for that. We will keep an eye out on this story as it pans out. But just watch out for the markets. We've seen a bit of a recovery, about 10-15 points from the low point of the day. That is courtesy ITC. That index heavyweight has now moved to the high point of the day. ITC should come up for you. That one's gained about 1.5% in the last 15 odd minutes. So we'll watch out for that. But let's shift focus to crude. Let's hear out Jonathan Garner of Morgan Stanley on what he's expecting from the OPEC meeting currently underway in Vienna.